Welcome to the Universal Accounting Center's accounting course with your accounting instructor, Alan Bostrom. Session 4, Practical Application in the Apparel Industry. In this session, you'll complete the monthly bookkeeping cycle for a clothing store. You will complete the journals, post to the general ledger, produce financial statements, and maintain subsidiary ledgers. And now, here's Alan.
The fourth and final practice set for this week is going to be City Clothing Company. Now, City Clothing Company starts on page number 4.1, and if we'll turn to 4.7, you'll see the chart of accounts for City Clothing Center. City Clothing Company simply sells clothing retail. Okay, so this is going to be somewhat similar and also more simple than some of the others we've worked at. You'll work through the processes. As you can tell, that they are a proprietorship similar to the other companies we've worked with the capital accounts laid out like they are, the owner's equity and the drawing account. Over in the sales and cost section, we have only one retail sale, so all of our sales are going to go to account 400, and we've got the 600 cost of sales, which we'll work with in just a few minutes. Let's turn the page to the first set of invoices. Now, all the transactions are first, and then we have all the journals following the transactions. So the journals begin on page number 414, although the invoices begin on page 48. And there are 2 pages of invoices. It's just going to be a matter of entering each of those invoices into the journal like we've done time and time again. I don't think there's anything we need to note special about these invoices, nor even do one at this point. I think you'll be able to, after doing this 3 times, be able to address how do you put these invoices into the journal. Okay? The only thing I want to point out is a couple things that we're doing in this journal that is unique. Okay? And so if we could, first of all, turn to the journal on page 414. I want you to note on page 414 that we're going to debit not the bank, but we're going to be debiting cash on hand. Okay? Now, we did this with artistic furniture, too. As we got cash in that we intended to deposit, we put it into cash on hand, right? Then, we're going to make an entry once we know what the deposit is and credit cash on hand and debit the deposit, the bank account. Okay? Now, to do that, there's 2 ways to do it. And I'm going to do something that probably, I hope none of you fault me for it, but I want you to look back in the appendix at how it's done in the answers. Okay? And I think that will be more helpful then in establishing how you want it done in your practice set. Okay? And if you look at the appendix on page number 5, appendix page 53, notice that some of the sales in the sales journal are going to be debited to cash on hand, and others are going to be accounts receivable. The customers actually have an account with us. So we're going to be debiting accounts receivable. Now notice down at towards about 2/3 down the way of the journal, you'll see that the reference is bank deposit 1, bank deposit 2, bank deposit 3, and bank deposit 4. Do you see that? Now that's where we're going to transfer the cash out of cash on hand and debit account 205, which is the bank account. Do you see how we're doing that? Notice that we're using brackets in the cash on hand account. Now we could instead, if we wanted to, put the 210 over on the right-hand side of the journal in the miscellaneous columns as a credit, couldn't we? But what we're doing is we're actually, by bracketing a debit column, what are we doing to it? We're in essence making a credit in there. And by doing that, we're avoiding having to actually enter in the general ledger that 210 credit. Once we get down to the bottom, after subtracting all the credits or putting the deposits, subtracting the deposits out of cash on hand and putting them into account 205, we're left with a $1 balance. Now, what does that mean? Someplace, yeah, probably making change someplace, right? we're showing in the cash on hand account, we're showing that we got certain cash in. Then when we take it out with a bank deposit, we're reducing that column and increasing account 205. Do you see that? And it's leaving $1 in that column, meaning that we got $1 more in cash that we didn't deposit. Now, and most likely the reason for that mistake was that we gave back somebody the wrong amount of change. We gave them back $1 too much, and they didn't tell us about it. Okay? And so we have what's called a shortage. There's $1 that we made in a sale that we didn't deposit because we were short $1 in the cash register. So down below that, we have credited, by putting brackets in that column, $1, and we've debited account 795 $1. Do you know what account 795 is? Short and over expense. Okay? And so we're charging cash shortages that $1 because we can't account for it. Now, when we're posting this journal, we're going to post the bottom totals. We're going to post the $9,044.98, and it's going to go to 3 different sources. It's going to go as a debit to account 205, a debit to account 220, and a debit to account 795. Do you see that? Are we going to post account 210? Anything at all? The total in that column is 0. It won't be posted. Why? Because using the journal, we pulled it out of 210 and put it into the bank account with the deposits. Okay? So nothing goes to account 210, and that's the value. We could have done it the old-fashioned way, and again, we're just using this as an example to show you different ways to utilize these journals. There's nothing that says we can't put brackets around and reduce it just in the journal itself. Okay? Then the rest of it, crediting sales tax, retail sales. Then notice that we've got a cost account, cost column in here. If you'll turn back to those journals, those invoices for a moment, you'll notice that there's a code in there, just like we've had before. Someone has actually gone through and calculated the cost, and they've put it in the way of a code. And this code is just eliminate the last 0 and read it backwards. Very common code. $145 is the cost of that first sale. Okay? So we're going to include that in the cost column. If you'll turn back to page 410, you'll see the 4 deposits that you're going to enter in. The 4 deposit slips. On page 411, begin the check stubs. We have inventory is going to be charged to inventory because unlike the bakery business, the inventory doesn't remain stagnant in the clothing business. What happens to it? At the beginning of spring, it ramps way up there, right, as we bring in our string fashions, and then it comes down. Then the beginning of summer goes right up there and comes down again. So for that reason, we're going to definitely charge any purchases directly to inventory. Okay. I want to turn your attention to the check on page 413, check number 1618, to Fred's Ford dealership. We bought a truck for $7,000. We paid them $1,000 down, and we set the balance of $6,000 up as a loan. Do you see that? Now, the credit to the bank is going to be how much? $1,000, the amount of the check, right? The debit to the vehicle fixed asset account is going to be how much? $7,000. So we've got a $6,000 credit that we need to explain. What's that $6,000 credit going to go to? Nope. Long-term notes payable. Okay? It's a notes payable, long-term notes payable, because it's probably going to be 3 or 4 years to pay it off. And so on the credit side, we're going to have 2 entries. Now that's that narrow side on the left side of the journal, right? 1 column's for the bank. The other columns, 2 columns are miscellaneous columns. And we're going to have a credit for $6,000 on the left side over there for notes payable, long-term notes payable. Okay? Okay. I also want you to circle you'll have to flip back a page number 411, 1604 and 1605, circle payroll, where it says payroll there. And then check number 1620 and 1621, circle payroll there as well. These are payroll checks. Now, we could combine the cash disbursements and payroll journal into one journal if we wanted to, but with all those credits for all the withholdings that we have and so forth, it's easier to work with the payroll journal specifically. So those 4 checks will not go into the cash disbursements journal. They will go into the payroll journal. Okay? And that's found on page 416. Okay, that's all we've got there. If you'll turn then to page number 417. Page 417 is our general journal form. We've already provided the opening balances. So the next thing we need to do is look at what other entries we're going to need in the general journal. So help me out here. What other journals are we going to, what entries are we going to need in there? Okay, good. Okay, you're right too. I'm going to do it in this order. One is entry B is going to be to set up the employer's portion of the FICA. Okay? So that's going to be entry B. Set up the employer's portion of FICA. Kathy, you mentioned the next one, which is what? Depreciation. How many depreciation entries are we going to have? What determines how many depreciation entries we need? How many fixed asset accounts we have. So how many fixed asset accounts does this company have? 2. Okay? So we're going to have 2 fixed asset accounts, so we're going to have 2 depreciation amounts. Okay? So entry C is going to be depreciation on furniture and fixtures. And entry D is to set up depreciation for vehicles. Okay? Let me just give you the amounts. Entry C is going to be $56 and entry D is going to be $117. The furniture and fixtures depreciation is $56 a month. The vehicle depreciation is $117 a month. Okay. Now, as we've done before, once you have completed recording all the transactions, the next step is to total the columns, right? And then we're going to make sure that the debits and the credits balance. Then we're going to post to the general ledger, total the general ledger counts, prepare the subsidiary ledgers that are provided on here. We have accounts receivable customers that we've got to account. We've got to figure out how much we owe each, or each of them owes us, and then prepare the financial statements.
Now, make the journal entries into the 4 journals on pages 4.14 through 4.17. Then post the column totals into the proper general ledger accounts. Then, using the general ledger account balances, complete the income statement and the balance sheet on page 4.25. Then complete the subsidiary ledgers. If you need help, the answers to City Clothing Center are in the appendix on pages 8.53 through 8.67.
Congratulations! You've completed Practical Small Business Applications. You're now able to complete the accounting process for small businesses in retail, wholesale, and service trades. The next course, Advancing Your Accountability, expands the accounting framework you received in Accounting Made Easy and Practical Small Business Applications. It takes you into a highly specialized accounting system such as an automobile or motorcycle dealership, manufacturing, and construction. In addition, you'll be taught the difference between cash accounting and accrual accounting and how to convert from one to another and how to set up a company's books from scratch. You'll complete books for 3 more businesses to gain added experience and confidence in more complicated forms of business where university and college training is limited. Now, good luck, and we'll see you then.